When we're looking at the range of a candlestick, let's just say from the high of the wick to the low of the wick. This just means that whenever price comes back to touch that candlestick, it can test the range of those pips of how big the candlestick is, right? So this candlestick is 28 pips long. So that means that there's 28 fractions or units of this penny that price can come and touch. And let's look at where we are. 125, 1.248. Remember, 100 pips is one penny. You're resting in the zone of 28 fractions of that penny. You decrease 28 from 100, right? It means that there's 72 pips left until price gets to the next cent. So you're probably going to be hoping, okay, well, maybe price can drop 72 cents to the next 100 pip point, which is $1.24. This is why I like changing the mindset of what a Forex trader truly is. And one of the reasons why I like changing this trajectory is because a lot of us try to think, well, I'm trading the market, I'm trading structure. We're trading money, currency, price. This is why I always want you to speak out the exchange rates more than the structure. Speak out the actions you're taking because you're telling yourself, I am the buyer or the seller of the pound. And I'm using the United States dollar in this situation to be able to do so. So it's really a mindset and a verbal change, okay? So let's continue to go forward here. So we know that price can test anywhere within this 28 pip range. This is why I say don't worry so much about the structure. Focus more so on the price that you don't want price to pass, okay?